Imagine paying $100 more a month for car insurance just like that. It's happening now because wildfires and floods are worsening, forcing insurers to raise rates. Take wildfire smoke. During the FIFA World Cup final, players like Mikel Merino practiced in hazy air from Canadian fires thousands of miles away. That wasn't just an inconvenience, it was a warning. Smoke spreads across the U.S., harming air quality and causing health issues like asthma attacks or respiratory hospitalizations, costing insurers millions for medical care and property repairs to the Insurers. Wildfire smoke isn't just an inconvenience, it's a growing financial burden. Imagine it like an invisible layer spreading across states, leaving behind damaged homes with blackened siding and health problems that require medical care. Even if you live far from the flames, this smoke can still hike your insurance premiums. More fires mean more claims for insurers, which then pass those costs to everyone, creating a ripple effect that pushes prices higher for all of us. Now let's flip the script from wildfire smoke to torrential downpours. Imagine 480 billion gallons of rain, enough to submerge a city like Austin under several feet of water, dumping on Texas in just 5 days. That's what happened in July, flooding highways and homes. Unlike wildfires, floods can strike anywhere, even in areas with rare heavy rain. Insurers now factor in this new normal, where more storms mean more water damage claims, raising premiums for everyone, regardless of location. Insurance premiums are like a cost-sharing system. When more homes or properties face damage from wildfires or floods, the cost per policyholder rises. That's why insurers charge more now. Rising risks force them to adjust prices to stay safe. For example, Google-backed satellites detect wildfires faster, but increasing disaster severity still drives up costs. But tech isn't sitting still. Enter FireSat, a Google-backed fleet of satellites orbiting Earth, scanning for wildfire hotspots faster than ever. These mechanical eyes spot flames in minutes, not hours, giving crews a fighting chance to respond. Yet here's the catch: detection doesn't stop fires from burning or smoke from spreading. If anything, earlier alerts mean more data on how often and fiercely these fires rage, data insurers use to hike premiums. It's like having a better radar in a game where the opponent keeps scoring more points. Imagine 480 billion gallons of rain dumping on Texas in just 5 days, enough to fill 769, 291 Olympic-sized swimming pools. That's what happened in July, turning highways into rivers and homes into floating islands. Unlike wildfires, floods can strike anywhere, even places that rarely see heavy rain. Insurers now treat this as the new normal, raising premiums for everyone because more claims. Think of it like a game. If more players get hurt, the price per ticket goes up. That's why you're paying extra. Insurers are playing it safe with rising risks. People used to think wildfires and floods were just a West Coast problem, like, oh, that's a California thing. But guess what? It's happening everywhere. Canada's wildfire sent smoke all the way to New York, turning skies hazy during the World Cup final. Meanwhile, Texas got hit with 480 billion gallons of rain in 5 days. That's enough to fill nearly 769,000 Olympic pools. Insurers treat this as the new normal, so rates go up nationwide. It's not just California anymore, it's everywhere. Insurers like Baldwin Group are responding to rising wildfire and flood claims by increasing premiums. Imagine it like a sports betting pool. If more players get injured, the cost per ticket rises. As extreme weather becomes more frequent, insurers raise prices to cover their costs, passing those increases along to customers. This shift reflects how climate change is reshaping risk calculations in the insurance industry. You don't have to wait for insurers to raise your rates. Take action now. Start by checking your policy coverage. Does it include flood or wildfire risks? If not, consider upgrading. Mitigate risks at home, like clearing dry brush away from your house or installing a sump pump if you're in a flood-prone area. Small changes can add up, just like saving a few dollars each month adds to a bigger safety net down the road. Climate change is the main driver behind these disasters. Warmer temperatures create drier conditions that fuel wildfires, while heavier rainfalls like Texas's record-breaking downpours become more common. This isn't just bad luck, it's a shift in Earth's systems. Insurers call it the new normal, but scientists warn this trend will keep pushing costs higher unless we adapt. Tools like Google's FireSat satellites are helping track wildfires, but the long-term impact on insurance remains clear. Prices will rise. This isn't just about big insurance companies, it's about your wallet and safety. Imagine filling up your car with gas, but the pump suddenly shows $5 more per gallon because storms or wildfires keep wrecking roads. That's what's happening with insurance now. If you live near water or dry brush, check if your policy covers floods or fires. You might need to upgrade. Small fixes, like clearing gutters or installing a sump pump, can save you hundreds over time. But here's the catch. Climate change is making disasters worse, not just a one-time thing. So unless we adapt, those higher bills won't disappear. If rising insurance costs are stressing you out, don't just sit back. Share this video or comment below what's your biggest worry. Small steps now, like checking your policy for wildfire or flood coverage, some insurers exclude them, or clearing gutters to prevent water damage, can save money and protect your home. Climate change is making disasters worse, but tools like Google's FireSat satellites are improving early detection.